Welcome, everyone. Another episode of the Turning Points. Wish you all a happy Monday, good afternoon, good morning, depending on your time zone, of course. How are you doing today, Versan?
Doing great. Always a pleasure to see you, my dear friend.
I'm doing great as well. We were discussing here before going live that we're going to repeat some stuff today, but there are new articles to back what we have been saying the last 3 or 4 years. I think we have been a lot ahead of the game. So there's this brand new article here. It's from the 24th of June. And I'm going to be very honest. I just found this like 5 minutes before we were about to go live. So we're going to kind of go through this article together. I was mentioning to Versan that this has, of course, Tether USDT at the epicenter. There are some interesting developments right now in terms of regulation. The regulatory framework is not optimal for USDT. It's in fact kicked out of Europe, and the red flags are raising continuously. I think the whole market is getting ready for something. I can truly conclude that we're going to see a bad scenario happening for the overall crypto markets, which in the short term is likely to affect XRP as well. But we all know that the final outcome is that this liquidity is going to flow towards the XRP ledger ecosystem, and that includes the digital asset XRP and also real stablecoin and all the native tokens built on top of XRP. So the article is about is this one that I have on the screen. It's from 24th of June. Central bank body, or I mean the BIS, delivers stark stablecoin warning. So we're gonna go through this article. Do you want to read it, Versan, if you can? Otherwise, I'll do it myself. You can see the screen from there.
I can see it.
Yeah, I can.
A little bit.
Opa, I zoom too much now.
Yeah. I try to skim through these things and look for the devil in the detail.
Yeah.
Go to those bullet points real quick.
Okay.
Right there, the top three. Yeah. What does that say? That's the summary.
Yeah, so BIS warns stablecoin carry multitude of system-wide risks. That's very interesting. Risks include monetary sovereignty, EM capital flight. Central banks need to boldly pursue tokenization.
Yeah.
So they are issuing warnings about stablecoins. I'm going to go down here so we can have a look at this together. This is kind of us doing live because neither me or Versan, we had the opportunity to read the article in advance, but just looking at the bullet points, it was about Tether. So it comes less than a week after the US Senate passed a bill to create a regulatory framework for the United States dollar-pegged stablecoins, a move which, if that's not my mother language there, but it says if rubber stamped by the House, is expected to full another. Sorry, guys, I got lost reading the article here. I have a hard time reading for the first time. Just a second.
You're doing great, man. Just keep going.
Yeah, it's okay, man. So it says stablecoins are a type of cryptocurrency designed to maintain a constant value, usually a one-to-one dollar peg, backed by real-world assets such as U.S. treasuries or gold. I love this, Versan. They are openly mentioning gold here as a way to back a stablecoin. So dollar-pegged coins currently account for 99% of the market, which is estimated to have over 260 billion worth of coins in circulation. So let's go straight ahead on where they talk about the systemic risk, and here it goes. So this comes from a manager from the BIS, and he says that Shin said also warning of the risks of fire sales of the assets backing stable coins if they collapse, as Terra UST. So you guys remember the stable coin that collapsed back in 2022. So there you have the BIS is coming openly saying that there is a systemic risk for stable coins. They also mention Tether in this article. So there is also the concern around who controls stable coins. Tether currently has more than half of the overall market, overall stablecoin markets, but quit the sorry guys, today I'm having a hard time here. But the fact is, I'm going to put this in my own words. Recently, MiCA regulation has came across Europe, and right now, basically, Tether has been kicked out of Europe. So we have seen these developments happening in real time. Versan, do you want to make some thoughts on the article?
Yeah, absolutely. You're going to start seeing a lot of these economists, analysts, and all these other talking heads starting to address what we've been covering here for years. That's because Tether is an unregulated shadow bank, and it's a mechanism that does print those synthetic dollars out of thin air, finances Bitcoin, props up crypto markets, and enables an ecosystem built entirely on leverage and speculation. And essentially, when you begin to build an entire ecosystem on market leverage with no real transparency, a collapse isn't just a possibility, it's an inevitability. So it's just a matter of time. And what most people don't want to admit is that while Bitcoin and Ethereum continue to be pushed as the face of crypto, the whole entire ecosystem underneath it is in speculation. And that's why we've said many times that over 99% of all these protocols that are pegged to them, to Tether, USDT, Bitcoin, Ethereum, they have no real world utility, no real infrastructure, and no sovereign backing. It's just hype and liquidity. So overall, what the new stablecoin bill is going to do, it's going to clean out the house. And that's going to basically force all these new stablecoins to comply with strict frameworks. That means audits, that means disclosures, that means having the one-to-one backing, and of course, the regulatory supervision. And when you realize that the lack of these requirements actually allows these institutional players like Tether to grow and in this unregulated ecosystem, what do you think they're going to do about this? And that's why I think the timing is so interesting around the stablecoin bill. Why are they actually enforcing it now, not 5 years ago when they should have done it? Remember, Tether's been audited so many times, and it's because it's a keystone of a crypto casino, right? And I can go on and on. So I'll take a break right there.
Yeah, so first, this sentence is very important. The whole question of disclosure, this is where some of the stable coins differ. And here comes the BIS Deputy General Manager, Andrea Meschler. He said, you always have the question about the quality of the assets backing. Is the money really there? Where is it? And then I have another article, which I'm going to put on screen right now. Just give me a second here. And this goes back to 2021, where crypto firm Tether had to pay a $42.5 million to settle a fine by the CTFC. And you can guess what was the fine about. They were lying about the USDT reserves. The US dollar reserves. So USDT is not backed one-to-one to the US dollars, neither backed by gold or anything tangible. We already discussed the possibility of countries dumping US treasuries that can also affect Tether as a whole. Now, they claim to have a certain amount of US treasuries to back it up. I don't see any evidences of that. They could also be lying. They already lied about the dollar reserves being one to one. They were fined in over $40 million. So it's definitely not a trustworthy stablecoin. And that's why I think it's also going to be the big loser from the Genius Act. And here comes another great article which I'm about to share on the screen for you. This comes from the Wall Street Journal. The big loser from the Genius Act is 156 billion crypto giants Tether. Another proof of what we have been saying for the past 2 or 3 years. I know we do a lot of repetition. I was just telling that to Versan, that it's through repetition that you build muscle. That's why you go to the gym every day for years. And I think it's very important for us to repeat what's happening here, because the narrative is just unfolding. Versen, I can hear on your end. I think it's a vacuum cleaner or something.
Yeah,
Maybe you,
sorry about that.
no worries, man. Maybe you can just, when I am talking, you can mute. Yes, you can mute the mic. So this is also a very interesting article, and it's just aligned with the narrative. And what I was putting some thoughts on my X today. The first thing that I have noticed is that Bitcoin Google search is hitting new all-time lows. So I will share another article here on the screen. As you can see here, Bitcoin Google searches remain historically low despite trading above $100,000. Now you have to ask yourself a question: why is Bitcoin near an all-time high if virtually there is zero interest for this asset? I mean, do you even realize that if you go back to 2021, when BTC was near the all-time high, near $69,000, you had all these family and friends that were wanting to jump in crypto, and back there in 2025, that's not happening. You basically, nobody's caring about crypto at the moment, and honestly, that reflects not only on the Google searches to be historical low for Bitcoin, but also the fact that the order books on exchanges are also lower than before. It's about 200 or 150% lower as per the last time I checked. And that also reflects in the low volume on the charts right now. So the fact that Bitcoin is near the all-time high, that's synthetic. There is no real institutional demand for Bitcoin. There is no big financial institutions buying Bitcoin at the moment. You can see that every week it comes a new article. MicroStrategy is buying tons of Bitcoin, yet the price remains the same. Where is the volume on the exchange? Sorry, where is the volume for that purchases? Unless they are doing OTC deals, there is virtually zero demand for the digital asset Bitcoin. So it's clear that they are leaving retail to run the show, meaning that there is no institutional capital flowing towards Bitcoin. Otherwise, it would open the charts and there would be huge spikes on the volume. That's not happening. So we don't have any real support levels. In other words, that's a giant bubble that can pop up at any moment. And considering the fact there is no support levels because of the low volume, we can literally see Bitcoin to collapse to $30,000, $40,000, $50,000 in a matter of days. So that's why I continue to say that Bitcoin is not a store of value. Gold is a safe haven. Bitcoin is not a safe haven. Gold is a multi-generational asset. Bitcoin is around for what, 16 years? How easy is for them to intentionally collapse Bitcoin? And I think that's what's gonna happen, and that capital is gonna flow towards XRP and also the other blockchains that deliver fast finality, that have great technical capabilities, that can afford to tokenize. That's the case of the algorithms, the Hedera's, XRP, XLM. So there is a multitude of blockchains that are going to be able to communicate with each other through interoperability. And what I think we're not going to see in the future is Bitcoin still around. What do you think about that, Versan?
Oh yeah, absolutely. You're spot on. Tether has already broken its peg multiple times. That means it's never been fully audited, and yet somehow it begins to survive. You got to ask the question, why? And it's simply because it's propping up an entire crypto market. But not just that, the rabbit hole goes so much deeper. It's actually propping up the US bond market. And that's really how deep this actually goes. So I really do believe at this point that whoever is propping Tether up, allowing it to survive and thrive this way, is holding Tether as like a time bomb card. So that means they're going to play it when it best suits them best. And I think that's just what they did with the Bernie Madoff scandal, right? They were warned multiple times. They allowed it to continue because they were making too much damn money off of it. Right now, we're seeing something very similar to this. It's too profitable to let it implode just now. But when they're ready to flip the switch, that means when all the tokenized infrastructure is in place, they're going to allow Tether to collapse to do multiple things. And here's one scenario. Number one, they could use it to pump Bitcoin artificially very high for a short-term mechanism and use that as a mechanism to pay off some of the US debt. As something Trump has actually talked about and floated out in the past. And then the other mechanism could be triggered as a controlled demolition of the crypto market, basically collapsing the entire crypto market, dragging it all down, not as digital assets, but to expose the traditional banking sector's leverage, all the unbacked reserves, and of course, connected to all the operations that Tether is involved in. And I'm going to tell you right now, I don't think this is speculation, because if you look at the future of where this is all going, it's being built right in front of us, but it all belongs to compliance. And that's why they're putting these regulatory infrastructures in place. So eventually you're going to see all of this implode. But for those who have done the homework, who understand actually that the real value in this space, it lies in the protocols, not promises, not in hype or anything like that. It's all about utility. So that's where I think XRP later on down the road, and of course XLM, if you look at them, they seem to be recognized by the IMF, the World Bank, that these are indeed the stable coins. So it's very possible that these could be the stable coins for all stable coins, where all these new digital currencies or central bank digital currency, whatever you want to call it, are issued upon these networks because they have the finality, they have the speed, they have the regulatory backing and so forth. But Tether could simply be a mechanism to completely collapse the digital space and say to justify government coming in and saying, this is why we can't allow this decentralized system to come into fruition. This is why we need government-backed stable coins. And of course, the IMF has touted this in the past, that if we're going to have digital money, it has to have some backing of real tangible assets. And that's Basel III. That's what gold is about. That's where the intersection between commodities and blockchain technology with tokenization aligns. And of course, XRP later on down the road will be at the center of all this, hence the title I put here. It seems that Ripple is slowly consolidating everything. But if Tether were to implode, where do you think all that money is going to go? It's all going to be funneled into those technologies with real utility and, of course, the regulatory backing. That's what the stablecoin bill is all about, setting the precedent for compliance. That's really what it's about.
Totally agree, Versan. Here we have more interesting evidences that we might be closer to a Bitcoin collapse than we can ever conceive. So, MicroStrategy president and CEO has sold the majority of his MicroStrategy stocks for the last 3 months. Here, he's also gifting it at $0. So that's very shady. What's going on? I mean, why is he dumping MicroStrategy if it's continuously going up, as Michael Saylor even say? Let's watch this video here.
And whether those, whatever 80% downturns when the crypto markets are in a bear market.
Yeah, again, I just disagree with your characterization. I don't expect an 80% downturn. I don't think it's a speculative asset, and I don't think you can quote unquote take money off the table. You're speaking like a crypto trader right now, right? Yeah, I mean, maybe you're doing it just to represent their interest, but I don't see the world that way. I think that Bitcoin is sound money. It's the technically superior asset class compared to the dollar, the euro, the peso, the bolivar, compared to a stock index, compared to gold, compared to silver, compared to everything you can conceivably buy. It is technically, thermodynamically superior as an asset.
Thermodynamically superior. What the hell he even means with that anyways?
So when you say things like that to me, and maybe you just do it just to see what I'll say back, I just imagine you preaching to me in Argentina while you're asking me if I'm going to sell the dollars and buy pesos back again as the peso leads from 20 to the dollar to 40 to the dollar to 80 to the dollar. Or if we're in, Venezuela. I mean, you think a Venezuelan company is going to quote unquote take some money off the table by selling their US stocks and their US dollars to buy back into local currencies? Or then, in Zimbabwe, you think they would take money off the table, right? The point is, if you have the superior asset, it's going up forever, Laura.
What do you have to say about that, Versan?
I mean, oh my God, I can go on and on about this, but overall, I think the stablecoin bill is going to be the beginning of weeding out the bad actors. And when all that dust settles and Tether is finally exposed, and this has everything to do with Bitcoin, I'll explain, but you're going to see a massive retracement across Bitcoin, and not just Bitcoin, but also Ethereum and other speculatory driven assets. That means money is going to flow somewhere else. It's not going to go back into fiat. It's not going to go back into tech stocks. It's going to go to real infrastructure, XRP, XLM, HBAR, XDC, and some of the other utility-based protocols that were designed to actually survive and thrive in a regulatory environment because they were built for compliance in mind, right? And when the system starts to take that route, that's when real utility is going to become the driver of real value. Until then, I think we're trapped in the old cycle. And this old cycle is exactly what Michael Saylor is referring to in a sense, okay? What he just said over there was all bullshit. That's the reality of it. But essentially, we're trapped in the cycle where debt-based markets, liquidity pumps, Bitcoin begins to peak. That's when the same whales who are owning the Bitcoin short it on the way down because the speculators get rinsed. Those are the people who are new into the space being pushed into it through all the marketing campaigns. The wealth then begins to rotate. It goes into gold. It goes into physical assets. It goes into undervalued altcoins. Then when the timing aligns, what do you think is going to happen? Boom. And then the rotation begins again. This is what we've been seeing for the last 8 years, right? The difference now, I think that there's a lot of government spending. That's the new big, beautiful bill. And what that's going to do is probably take Bitcoin to another all-time high, even though we're still in the early stages of this stablecoin bill. But they're going to play it out very slowly, as we've all learned in this community. These things don't happen overnight. They actually take time. So the new beautiful bill is going to inject liquidity into the system like never before. People are starved for opportunity, including myself right now. In the traditional economy, we're not making as much money as we were before, and that window continues to close. So we're all being hit by this. And at the same time, people are being forced to put their money into digital assets, speculative or not, because their only hope is to make yield on this stuff. So that's the transitioning of the mechanism. That's the bridge. So don't be fooled. You know, the bridge isn't built for freedom, in my opinion. I think it's built for control, but this is just surface level conversation, what we're talking about here.
Yeah, we discussed
It goes
that in
deep,
more
right?
details.
So
It's a deep rabbit hole, but I have always said this sentence, and it's about you have to make a choice. Do you want to be an early investor of the technology, regardless of the outcome of this technology, or you have no choice and be a late adopter? So I think the best thing is position yourself, make money in advance, so in the future you can protect yourself and your loved ones.
agreed. I mean, those who are willing to look underneath the surface of the narrative, that's the BS that you hear 24/7 around. You got a lot of people on X even pushing this stuff. I've seen it. And anyone that's putting real facts out there, they don't get any attention. They get continuously suppressed. Anyone who sees the system for what it truly is, not what they want it to be, those are the people who are going to succeed in this space. And that's the reality of it.
Totally agree. Have you got the chance, by the way, to watch this video I have here on the screen?
No, but isn't that
No,
Nathan?
no, let me break this down. This is fantastic. So,
Right.
Nathan did the video where he asked that notorious question to Brad Garlinghouse, where he just dropped a bombshell and he said that XRP would capture 14% of Swift in the next 5 years. Okay, so Nathan also sent me this one. Nathan recorded this. So this we got on first hand that you can't find that anywhere else on the internet. I was the first person to publish this thanks to Nathan, which by the way, he couldn't join us today. He's in Greece traveling some islands right now. And the fact is, to give some context, they asked the same question to Brad Garlinghouse and to David Schwartz, and apparently the two of them didn't communicate. So I think that David Schwartz was not aware that Brad Garlinghouse had already gave the secret sauce, the 14% notorious answer, but he came with some very interesting answer, and that comes about hundreds of billions of dollars in real world assets on the XRP ledger. So if you don't mind, Versan, I'm going to play this clip. It's a bit long. Do you mind if I play the entire thing? I think
Of
there's
course.
a lot of things
I'm
to
here to
unpack.
learn, man. I'm here to learn with everybody as well. I haven't
Yeah,
seen it yet, so I'm excited.
we're going to break this down in parts. I can kind of pause the video when there's something very relevant. It's about 2.5 minutes, I think. Yeah, no, it's 4 minutes. So I'll just play it and we can go step by step. So it's
Great.
difficult to understand the initial question, though. It was from some Asian kid that was there.
Let's do it. Edo.
Yeah, tell me.
Oh, are you gonna play it?
I was playing now. It's not playing on your end.
Not playing. Yeah, I can't hear anything.
Okay. So okay, I got what happened. I have two different windows with the same video. So now I'm gonna play the correct one. My apologies. No, yeah. Yes.
Saying that the XRP will get on board in the next 5 years. So there's a multi-trillion dollar market in hedging commodities price shock. There's an enormous market where people have to get paid for commodities before or after they have to provide those commodities, and they want to protect themselves against fluctuation. I think the bigger market for that's in foreign currency, but so why let's say tokenization real estate? Yeah, why would someone actually choose the XRP compared to other competitors you have? I think the XRP ledger's advantages are going to be the faster transactions. I think the more predictable transaction fees, the lack of smart contracts, which means you don't have all the security vulnerabilities of smart contracts. And hopefully there'll be a lot of liquidity to enable people to move between which assets they use to do that. But I think for many of those use cases where most of what's happening is off ledger, it almost doesn't matter that much what ledger it happens on. So it's going to be interesting to see what the actual competitive drivers are. Okay. You know, like a land registry is a good example. A land registry really is not going to interact.
So just before he moves ahead, I think the most important thing here is he's saying that financial institutions need a blockchain where fees are predictable, just like the XRP ledger. The fees are capped. You know exactly how much you're gonna pay, regardless if you send $1, $100, $1,000, or $100 million. That is always the same amount. The same thing is not true about Bitcoin, and it's not true about Ethereum and most of mainstream blockchains. So this is the big message here. You can't expect a financial institution to move money on Ethereum when today the fees are $30, tomorrow they are $50, and perhaps next week $130 based on the amount of money that you want to send.
That much with other things on the ledger, at least initially. So it almost doesn't matter what ledger it's on from the point of view of the registry. And so I don't know what are going to be the drivers. I'm hoping that low cost, predictable transactions and the not having the need to develop and manage and maintain smart contracts, better wallet integration. Yeah, the history of predictable, but it's hard to say because again, it's going to very small things are going to make a difference. I think one thing that's going to be big in a lot of those use cases is auditability. Okay. And most blockchains are just very transparently and easily auditable, but some of them are more difficult. For example, Solana is just really difficult to audit because because of its sharding features and the fact that it's moving so quickly and it has such a high transaction volume. I think those things will actually be disadvantages in this space because they do make it harder to audit what's going on. Privacy features will actually make it harder to audit.
So let me just break this down quickly. He's saying that blockchains that are difficult to audit are out of the equation. Now, let me tell you three blockchains that are difficult to audit: Solana, Ethereum, and Bitcoin. Now, three blockchains that are easily auditable: it's XRP, XLM, Hedera, also Algorand. Now, let's go ahead. Later, I can make some extra thoughts on
what's going on. So those things might be drivers, but it's hard to say. You know, it's going to it's going to be kind of somewhat arbitrary. There's not going to be any real reason to prefer one ledger over another unless the integration with other liquidity sources matters.
For sure. So last question: how much volume of space volume do you think that the XRP can onboard in the next 5 years?
Well, I think you're going to see many hundreds of billions of dollars of tokenized real world assets fairly quickly. I think it's for a dumb reason, but I'll take any reason. The reason is auditability. In most of the big problem with auditing right now is if I hand you a bunch of records and I tell you to audit them, you can audit them and you can say, hey, these records are cool. David's doing everything right. The problem is, how do you know that I don't owe somebody some money or have something out there that I didn't provide to you in the records that you audited? There's no way to do proof of absence in like the TradFi space. And so the way companies have handled that is they use a third-party transaction like operator. So if I'm the company, I hire him to do all my transactions for me. And if you're the auditor, you don't go to me, you go to him.
Right.
And the theory is he and I would have to conspire to withhold things from you. And he wouldn't do that because he's very trusted and well-known and reliable. But there's a lot of problems with this. One of them is if he loses your trust, I'm screwed. The other one is I'm paying him a whole bunch of money, and profit margins in this business are razor thin. I mean, it's so competitive that a couple of basis points is a huge difference. And me having to do everything through him is a huge drag. If he screws up, I can't service my customers. He's going to charge a lot of money because he has a reputation that's at risk. And that problem just completely disappears. You put it on a blockchain. Proof of absence is trivial on most blockchains. And on the XRP ledger, it's trivial to prove that my total exposure is this much. And you can do that continuously, right? If an auditor sends a request, if you send a request to him, I'm going to get a bill for everything he had to do to answer, right? And you can't audit continuously because he's going to get very annoyed, right? But you can audit blockchains continuously. You don't need to use a third party to launder your transactions and build credibility with auditors.
So have you heard that person?
No,
Hundreds of
that was
billions.
my first time hearing that video, but there were a few things he did mention I totally resonate with, and I can actually help you explain this, but you already get it. One thing he did say that caught my attention is said, I don't know what is going to be the driver of this. See, I pay attention to the devil in the detail because I actually do know what the driver of it is. I'm serious. I mean, if you'd like me to explain it, I can. I'll keep it very
Please
brief.
go
I'll
ahead,
try.
man. That's why I wanted to share the video live with you. We have
Yeah.
a lot to unpack here.
Of course. No, I get it. So when he said what's going to be the driver of it, you have to understand that the global banking system is extremely leveraged. That means it's not flawed. It's actually a feature, a mechanism that keeps it going, right? And for decades, if you look at fractional reserve banking, that's allowed institutions to lend money that they don't actually have, creating layers upon layers upon layers of synthetic liquidity, right? And now you're starting to see the cracks in that model in the traditional banking system that are no longer theoretical, you could say. They're actually showing up in the bond market. You see that in bank failures. You see that across sovereign debts. That's starting to spiral out of control. But rather than fix the system, what do? They try to plan to consolidate it. And that consolidation phase is already underway. We see so many examples of this everywhere. Now, the driver, as smaller and smaller banks begin to collapse or get absorbed, the trust in the traditional institutions begin to erode. What does this mean? It means that they're already setting the stage for some new kind of central bank. Hence the title I put over here. One not bound to borders, not bound and limited to monetary policies, right? One that's built on a protocol, not politics necessarily, a cross-border settlement system, you see? And that's why I think Ripple enters the equation over here. Somebody put in the comments, would JP Morgan acquire Ripple? No. And in fact, if we were supposed to see something like that, it would be Ripple acquiring JP Morgan later on down the road. But I don't see that happening either. JP Morgan's been here forever, right? So again, we have to reflect on that. Ripple's not just a fintech company. It's the scaffolding for the new financial system, you could say. So through partnerships with the central banks, financial institutions, private markets, and so forth, Ripple, you could say, is gradually becoming the central counterparty for cross-border value. That's going to be the driver of this. And XRP, of course, is the bridge, the reserve settlement layer.
Yeah, nicely said, Versan. I also love how he demolished, in a very polite way, Solana blockchain. He just would.
Yeah.
I love it. He just
brushed it aside.
Yeah, just brush it to the side. And indirectly also Bitcoin and Ethereum because of the technical requirements for the new financial system. But it really got my attention that he's expecting hundreds of billions of dollars on tokenized assets on chain on the XRP ledger. And then if you combine that, let's make an intersection of his answer with Brett Garlinghouse, where he said 14% of Swift is just, you just start to calculate what's going to be XRP price when everything moves on chain. And it's just going to be insane, right?
I agree with you. And if I can add some flavor to that, if you look at today's SWIFT system, right, they settle over what, $5 trillion, $6 trillion a day, something like that. It takes 2 to 5 business days. It has multiple intermediaries. Money gets lost because of counterparty risk. If XRP can do that in seconds, trustlessly, without the pre-funded accounts needed, with the full transparency and audit that you mentioned over there, then that means to replace SWIFT or act as a bridge currency between tokenized assets, national currencies. That means XRP must be scalable to carry the global liquidity. So it's not just one corridor, it's for the entire system. And that requires a very high XRP price. Because if you do the math, and the math says that liquidity equals price times supply, that's the XRP supply is finite, right? Has a fixed supply of 100 billion.
Finite and deflationary.
Yeah. And a lot of people like to use the escrow as a mechanism to throw what we're talking about here out the window and brush it aside, but they're wrong about that. When you start to compare 100 billion also into the size of the global economy, here's the math then: 80 to 100 trillion in global GDP, $7 trillion daily in Forex volume, 5 trillion in global payments. That means SWIFT, 5-6 trillion. Then you add tokenized real estate, bonds, commodities, central bank digital currencies, if that's going to even be a thing. Okay, I'm not talking about that. These are the facts. We're talking about quadrillions in value over time. So you start to ask yourself, okay, well, how much value can XRP bridge at 50 cents or even $5 per coin? Not enough. If XRP is going to do all of this, and like I said on the tweet, people talk about the price without explaining what its intended use case is. If its intended use case is to facilitate everything we just mentioned here, that means you need less volume, but you need more value per coin. Yeah.
Yeah, that's also confirmed by the man himself. That's a quote from David Schwartz. A higher priced XRP is a better vehicle for payments. That already says everything. And if we really go back to the roots of Ripple, what they were telling us they would, when they were telling us that before the SEC lawsuit came out, Ripple used it to speak much more openly about their plans. And one of them was to make XRP a global reserve currency. And the second one was to make XRP to replace the pre-funded accounts, the Nostro Vostro accounts. They removed that from their vocabulary. So meaning they were not openly saying they had these plans for XRP, yet their actions were matching the initial plan. So everything they have been doing in the past 5 years, despite the fact that they are not doing it, the reality is they are doing it. They are taking all the actions moving towards that direction. Here we have I think that's from the BIS, right? Or from the
World
International
Bank.
World Bank. Yeah, the central bank
2021.
banks.
Right.
That's the Tango one.
Yeah, from 2021, takes two to tango. And then, of course, I saw a comment earlier. I'm not going to get into it right now, but I have a great article about the complementary relationship between the two and how they service different niches, but also complement each other. It would seem like XRP, and this is theoretical, but XRP is the gateway. Everyone knows that's the access point from the traditional system into the digital system, but it's also the bridge into the XLM ecosystem as well. And that's like a very interesting rabbit hole I started to dive down to. So XRP bridges from the real world to the digital ecosystem. It's the gateway. And it also opens the door to the XLM ecosystem, which is more P2P. It's incredible. It's incredible. And it's theoretical. I don't know, but that's what it's starting to look like. Have you seen Brad Garlinghouse's tattoo, the old one? The old one, not the new one. It's the XRP around the Stellar.
Oh yeah, I saw that. It really resembles a Stellar logo, right?
Both. Yeah. You have the Stellar logo and the XRPs in the middle of it. So which one is which, right? It's like, is XRP opening that door? It is, because it's a gateway, it's a bridge currency, but it's opening the door to the digital ecosystem, which is Stellar, really, who's building the UBIs, the P2P mechanisms, of course, banking the unbanked after they bankrupt everybody.
I love this sentence, man. I just brought to the screen. I don't want people to forget that XLM is trading at 23 cents. How undervalued is that? I don't think people even realize that one of the most fundamental assets for the new financial system, it's still more undervalued than XRP at the moment. I'm saying that XRP at $2, it's extremely undervalued. But the fact that XLM is trading at 23 cents, that's shamefully undervalued. What do you think, Versan? Is that the fair price for XLM?
Absolutely, yes. And well, no. It's extremely undervalued. That's an understatement, in fact. But one thing it's important to clarify, I put a tweet out on this morning, but or yesterday, I'm sorry. But as long as these altcoins with real use cases and real utility are coupled to Bitcoin through Tether, like we talked about earlier, where everything is coupled to this artificially inflated, highly leveraged, speculative ecosystem with no real infrastructure or use case. That's the reality of it. As long as it's coupled to these legacy market volatility cycles, what's going to happen? It's going to be suppressed. And there's a time and place for it. So only regulation, and that's the stablecoin build, the early stages of what we're about to see, is going to break the chain, no pun intended, right? But once that begins to decouple from these illegitimate systems or ecosystems, you could say, then these technologies won't need to really ever be coming down again, right? They wouldn't be volatile like this, because then it would have to function with the compliance. That means the regulations. So therefore, they would only grow in value. And XRP, by the way, I've stated this before, but I don't think the mechanism of it was ever supposed to come down. It was designed to be infinite if you really begin to understand the technology. So the higher the price goes, the more value it can move around. So it's not supposed to come down. The price could be infinite potentially.
I agree, Versan.
Theoretically.
Eventually, it will just absorb all of the liquidity, and it's literally unlimited as more and more things are going to come on chain. You have the whole derivatives market, real world asset tokenization, including all the every single piece of real estate can also be tokenized. And that's also something that Nathan told me. They asked David Schwartz in Singapore what he believed was the most undervalued functionality of the XRP ledger, and he said that it was the DEX. So the XRP ledger has a built-in DEX. It's the first ever built-in DEX on a blockchain. So it allows uh, individuals and financial institutions to trade assets, goods, and services on the ledger, and that happened since 2012. And he said that what disappoints him nowadays is that financial institutions are not using the DEX yet. So that also hints the fact that in the future you're going to have financial institutions using the DEX on the XRP ledger. And I think the only reason why that's not happening yet is because of the lack of regulatory framework. And that's literally changing as we speak. We know that the SEC lawsuit is coming to an end right now, and that's going to open a whole new chapter for the XRP ecosystem. And that's also confirmed by Brad Garlinghouse. And now, before we get to the next topic, me and Versan did a video yesterday, a very important video, and that's about how to safely storage your XRP and your crypto. And just today, I got a very sad DM. Someone said that they had, I will not tell the identity, but he says that his Velo on Stellar term got stolen. And he was asking me how I think that happened. So I want to make something very clear. Never have your your seed phrases on your notes on your computer. That's a very important lesson. This person had his seed phrases on the notes on his iPhone. So
Yeah.
likely, that's my speculation on what happened. I think he has the notes that's synchronized with the MacBook. So if your computer gets compromised or your iCloud, they get access to your crypto, and that's how they are draining wallets. So I'm making a very important question. Always have only on paper, even better if you have a titanium plates, that's even more important. Now, yesterday, me and Versan took almost 30 minutes just to make a video. We revealed our strategy, what's the safest way to have your crypto. So the video likely goes live, I think, tonight. So you guys are going to be able to learn more about security.
Yeah, it's specifically about protecting your digital assets and, of course, being very careful. Another thing, if I could share this with people, some smart contracts that are tied to airdrops that could potentially be dangerous too. I know some of these protocols out there, they offer these airdrops. Personally, I just don't accept them. I've been offered multiple airdrops through the Descent platform, just turn them down. I don't want anything for free. That's like welfare in the digital space. That's exactly how a CBDC will work, by the way, if they have one. They will just airdrop free money to you, basically. But
it's too risky.
Yeah. Forget it, right? And also, as far as your seed phrases, keep that stuff on paper, and not only on paper. They have these metal plates you can buy on Etsy or Amazon. Yeah. You know.
Yeah, that's very safe. Well, we broke that down in details in the video, so everyone is going to be able to. We highly recommend everyone to watch the video. Versan, any other topics you want to share? I think I had all the articles I had here prepared. I have shared them, so you might want to come with something new or anything else that you want to talk about.
Well, keep it short. I first of all want to thank our whole audience. I want to thank you too, Edo. I think so many times we've made like history here. It's just maybe others haven't recognized it, but I'm just grateful for you and the community and all the content and the research we've done together. It's incredible. So thank you. And I don't thank you enough, Edo. I really appreciate it. And I'm humbled by your friendship, man. You're like my older brother.
Man, and the people who watch us, they know that we have been spot on. Now you will see when this Bitcoin downfall starts to unfold. I hope people remember what we have been sharing here on the show. Okay.
Yeah.
I will leave that. Now, final thoughts from my side, guys. Please don't fall for scams. Just yesterday, I was another insane thing. I was live with James. You remember him? We
Mhm.
had a few live streamings with
Hope he's
James, and
doing well.
someone in the comments was saying, "Edo, you are a scammer. Give me back my £6,000." So this person was scammed. Yeah, he was in the comment sections insulting me, and I said, "Look, you must be talk to a fake account of mine. I don't even know which platform. So be very careful, guys. We're not gonna approach anyone asking for crypto, for digital assets, for dollars, euros, whatever fiat currencies. Be
Yeah.
very careful. Always check 20 times if necessary. Okay. On Twitter, you can look for the verified badge. I know it's more easy to spot the original accounts from the fake accounts. On the YouTube section, on the comments, they will come out with fake YouTube channels and they will give you fake WhatsApp numbers. So I will tell this one more time, be very careful.
Hmm. Yeah. You know what? Maybe I can add something very short to that. First of all,
Please go ahead, man.
yes, we don't use, well, I don't know about you, Edo, but personally, I don't use Telegram. I don't use Discord, and I don't have a Facebook account or a WhatsApp account. There are a lot of people who've been reaching out to others. I got a message from someone on X yesterday saying, "Hey, Versan, was I talking to you on WhatsApp or Telegram?" It was one or the others, but I don't use that stuff. You can always reach me on X. I'm also about to start paying for a golden badge. I do have a blue badge. You can also reach me directly through my website. That's the easiest and only way, really, you could reach us. There are a lot of scammers out there, and as we keep going down this digital rabbit hole, I'm telling you, you're going to see a lot of people emerge from the shadows and begin try to siphon your wealth from you. So just be extra cautious. And of course, I want to thank the whole community for all the support. And I'm still trying to get to 100,000 subscribers so I can get my damn plaque. I want to put it right here.
I am sure you're gonna make it before the end. I hope in the next 2 or 3 months, Versan. I think it's definitely possible.
I
We're
mean,
gonna
we'll
help you
see.
out. We're gonna
Thank
boost.
you. Yes.
Yeah, guys, you
Appreciate
have
it.
to help us out. Drop in the comments your location. I'm not saying the street where you live, of course, for your privacy, but the country that you are living. So it definitely helps us with the algorithm. If you just drop a comment, say, guys, I am in Greece, like percent in the United States, just drop your location. That helps us to boost, to reach more people on YouTube. And I think
Yeah.
that's all. I don't know if you have
Actually,
anything
there
to
is one more thing. I'm so sorry.
say,
But
man.
a lot of people have asked me, why do I only put verified posts on my X account? I
That's
started
good.
doing that because there were a lot of scammers who were
Yeah.
starting to
Yeah.
post. And I didn't want to allow that to continue. And a lot of people were putting bullshit out there. And I tried to protect the audience from the bullshit. So if I can make it verified, scammers are not going to pay for a verification. And I'm sorry about that. But overall, I just don't want people to even have that 0.1% chance of being potentially scammed. Oh, look at this technology. I'll hop in here, right? So,
Yeah, man, it's a good choice. It's also impossible for us to block every single scammer. I mean, it would become a full-time job, honestly. By the way, we have people from everywhere: United States, England, Texas, North Carolina, well, all over the world. I mean, it's so many. We have almost 6,000 people watching us live. So I want to send a special thanks to the audience, and we're gonna see you guys next Monday.
yes, blessings to you all. Thank you kindly. And Edo, I'll talk to you later. Thanks.
Take care, man. Oh, someone's calling me. Yeah, I have to tap here to end.